Okay, Mickey's ears are right on 7:30 here in Phoenix. I'll tell you, I wish you had been here with us this morning as we came in. The sun was coming up. It was one of the most beautiful sunrises I've seen in a long, long time. And again today, it appears as if we are going to set a new record for the high, approaching 90 again today. So for you guys in the east, come on out. I think there's a couple places still left for you to rent out here. I'm not sure. Everywhere I look, it looks like we've got a lot of people in town. Today we're going to talk about business formations. There's different ones. The importance, I think, of this type of a webinar is that you're led to believe, if you listen to advertisements on the radio by those puppy mills that set up corporations for you, that you should just go ahead and pick one and set it up. That's not true. What you want to do is to figure out, or have someone help you figure out, what the most tax efficient entity there is for you under your particular circumstances. And we're going to talk a lot about that today. We'll have questions at the end. I'm going to have to leave right after the presentation, but Raven and John are going to be here to answer all of your questions. They can probably do a better job at it than I do. So let's get started, of course, with the disclaimers that we have to have. And our contact information. Now I am going to try to ask you a question. Would you please take a couple minutes and answer it for me? Okay, about 10 more seconds. Okay, pretty neat here. We've got a lot of small business owners, we've got a lot of traders, and we've got a fair amount of people that don't have any business at all at this time. So I wonder why those people that have no business at this time are getting up this early in the morning. Okay, I got to figure out how to close the poll, so just a minute and bear with me. Close. Okay. I got it. Okay, so we will talk about business entities from 2 or 3 different aspects today. Those people that haven't set one up, those people that are small businesses, and traders. And there's significant differences, folks, so bear with me. Today's presentation is going to be about the different types of entity formations, discussions of the pros and cons of each. What state should you form your company in? That's an important one. And I've already formed my entity, now what? Getting started. Excuse me just a moment. Okay. Okay, we're starting right with the top of the business formation. My IT guy is hovering over me after yesterday's fiasco. If you were with us yesterday for our presentation, you recognize how many things can go wrong in a webinar, because they all did yesterday. And there were answers for all of them, but some of the answers weren't so very nice. Anyway, hopefully we've got that all straightened out. So one of the first businesses that you could set up, or formations, is a sole proprietorship. Now the benefits, there's absolutely no tax benefit to it. You're going to be taxed personally on the profits from your business and the losses from your business. You've got no asset protection. If you're sued and your business is in your name, they can take that business away to satisfy any judgment against you. On the other side, there's no fees for setting it up. The only thing you need to do is request an EIN from the IRS because you still need to have certain things. Those certain things would be a checking account and a charge card, if you use charge cards, in the name of the business and under the EIN of the business, because more people get into trouble in mixing their money between their personal side and their sole proprietor side. So you've got to keep it separate for the government. And again, as I said many times, you've got to be able to document your purchases. But make sure you have your business bank account and a card under the EIN number. Now, at the end of the year, for a sole proprietorship, you don't file a tax return for it. You file a Schedule C, which is part of your 1040. And the Schedule C is a fairly simple form. It's got your revenue, your expenses, and your net profit or loss, which then go across to your 1040. Now, one of the other problems with the sole proprietorship is that we are all led to believe, and the statistics bear this out, that sole proprietorships are audited a lot more than business entities. So that's another thing, if that's a worry to you. Now, if you've got everything straight up, then it's probably not going to be a worry to you. The next step on our business formation list is what's called flow-through entities. They're called flow-through entities because the profit or loss flow through to the owners of the entities based upon the percentage of capital contribution that they have in the entity itself. Generally speaking, there's no tax benefit with a flow-through entity. The benefits are primarily asset protection. The other benefit is that they are audited a lot less often than the sole proprietor. And another benefit for you people that are new to business is it seems psychologically, and a lot of the psychologists that I talk to, particularly in the trading business, bear this out, that when you have set up a business entity, that you seem to take whatever you're doing a lot more seriously. Now, starting with the LLC, it's a limited liability company. It starts with the members. Now, the members are selected by the amount of money that they put into the LLC. Let's say we have an LLC with 10 people in it. Everybody puts in $10,000. Well, then each person would own 10% of the entity. But if one person put in 15% and one person only put in 5%, you'd have a 15% owner and a 5% owner. The members elect a manager, and the manager hires the employees. An LLC can be a single member LLC. If it is a single member LLC, and what that means, it's owned by only one person, the IRS disregards it, and it will give you asset protection, or it won't give you asset protection in many states, I'm sorry. You can elect to treat the LLC as a C corporation, an S corporation, a partnership, or disregard it. If it's a single member LLC, you treat it as a sole proprietorship and have no asset protection. For you traders out there, it makes no sense other than asset protection, if your state provides it for a single member LLC, and most don't, it makes no sense to set up a single member LLC. You need to find somebody that you can talk into 1%, even if you have to give them 1%. Or you can set up what's called a management trust, which you would own, and it would be the other members, so that you can get a multi-member LLC and then select how you want it to have taxed. Owners are called members. You can have one of the members manage the business, or you can have all of the members manage it together. The profit and loss flow through to the owners based on the capital contribution. In Arizona, the registration fee to set up an LLC is only $85, and for some reason the politicians haven't figured it out yet. There's no further annual fees in the state of Arizona. Now, depending on what state you're in, these fees can vary all over the place. In Illinois and in Texas, the amount is pretty big. In California, the amount is only minimal. However, California has a franchise tax. Whether you make money or lose money in any type of entity, you have an $800 tax payment every year. So you can set up the LLC yourself. They're easy to set up. You can hire an attorney to do it, or Small Business Financials set them up. Small Business Financials charge $595, which includes a one-time consulting session with a tax attorney after set up. Now, I can't say enough for that. These people that are, these puppy mills that I called them before, they make you think that it's the cheapest way to go. But by the time you punch all the buttons of the things you need, if you even know what you need, the cost gets up there pretty high. And then most of them don't offer any type of coaching at all. That's why we selected to have our tax attorney meet with everybody that sets it up, so that you understand how to capitalize it and what documentation you need in it. You should have a meeting of all of the owners at least once a year to discuss the financial results and ongoing financial budgets. Meetings should be properly documented. At the end of the year, if you have a multi-member LLC, it will file its own tax report to the state and to the IRS. The last pages of the federal return are called K-1s, and there's one for each owner showing the amount of profit and loss that that partner is responsible for. With a few exceptions, you will also have to pay payroll taxes on your share of any profit. Now, for you traders out there, if all you're doing in an LLC is trading, there is no payroll tax. So an LLC will save you the 16-17% of payroll tax that another type business might cause you to have to pay. Partnerships, we're all over the board with partnerships. Generally, what we see is limited partnerships. And a limited partnership is set up through the states you operate in. It has a general partner and other limited partners. The general partner makes all of the decisions and has all of the general liability for a partnership. Whereas in the LLC, there is no liability for the LLC unless the LLC is responsible for the liability. And what I'm trying to say there is, let's say you have an LLC with your trading account and $100,000 in it, and you go out and have an automobile wreck that they judge as your fault and your insurance doesn't cover everything. If you had a partnership and you were the general partner, they could come after your funds, your personal funds, to satisfy that judgment. In an LLC, they can't touch it. It's a separate entity protected by law. Now, if the LLC commits fraud or something, that's a different story. Limited partners in a partnership have no authority and are protected from liability. Ownership is dictated by the amount of capital investment you make, and all profit or loss flow through to the owners based upon the percentage of ownership. In a limited partnership, you can definitely have unequal ownership. Now, when I first started trading, partnerships were the way to go because LLCs were new on the block. Nobody knew much about them. But since then, they've become pretty antiquated. And partnerships are used a lot in real estate transactions, particularly big real estate transactions. So anyway, a partnership can be used for a business, or now there are other type partnerships where you just shake hands. Those generally are not, there's no paperwork and nothing with the IRS. Now the next thing is a sub-S corporation, another flow-through entity. The shareholders own a percentage of shares based upon how much they have contributed to the corporation. The shareholders elect the directors of the corporation. The directors appoint the officers, and the officers hire the people. Now, to set up a sub-S corporation, you set up a regular corporation and then file a sub-S election with the IRS. Ownership, again, is predicated on the number of shares of stock in the corporation that each person owns. All profit and loss flow through to the shareholders by the percentage of ownership they have. And corporate protocol, whether it be an S-Corp or a C-Corp, is much different than an LLC. For a sub-S corporation, it's primarily the same as a C corporation. And that means you really need to document not only your expenditures, but all of your major decisions. And there are handbooks that help you through that. Or if you've got an accountant, you can always ask them on it. Sub-S corporation is great for small businesses. It's absolutely the tongue of death for a trader. And why do I say that? Because if you trade in a sub-S corporation, the IRS has ruled time after time after time again that a reasonable amount of profit has to flow through the sub-S corporation and be paid to the owners as payroll. And when you pay payroll, what else do you get to pay? Sure, payroll taxes. Remember, back in the LLC, if you're a trader, you have no payroll taxes. So a trader would not generally use a sub-S corporation. Would use an LLC if the flow-through entity made sense for them. Now, one of my favorites for everybody is a C corporation. You have shareholders who own the company. They appoint the directors. The directors hire the officers who hire the employees. A C corporation is not a flow-through entity. It's what's called a standalone entity. It pays its own taxes, but it pays them at a much smaller rate than you and I as individuals do. Because it's a standalone entity, there are two ways the owners can take money out, either as payroll or dividends. Now, let's get to the age-old wives' tale that a corporation is doubly taxed. True, it is if you take the money out through dividends. Dividends are not an expense to the corporation. They are just a payback of the capital. So you would have double taxation if dividends were paid. But if you pay payroll, then that is an expense to the corporation. Now, why would you want to pay payroll? Well, a lot of people are trying to max out their Social Security contributions. A lot of people are setting up retirement accounts where you have to pay payroll in order to contribute to them. So there are reasons to pay payroll, no matter whether you're a trader or a small business person. Most small businesses will want to make a resolution to accept a Section 1244 stock plan. Now, this is something that you're going to hear very seldom. A Section 1244 tax plan gives the owners of the C corporation, as long as it's small in revenue, and off the top of my head, I don't remember how much, but that's a question that you can email in and we'll get you the answer to. If it's set up as a 1244 corporation, if you decide to dissolve the corporation and you have a loss in the corporation, the loss can switch across to your personal tax return, and you can deduct it on your personal tax return. That's Section 1244 of the IRS code. As a corporation, you need to hold and document corporate meetings of shareholders and directors. Document corporate action taken without a meeting. You don't have to have a meeting. You can just document that you've talked with all of the directors and it's happened. And approve common ongoing corporate legal, tax, and business decisions. You need to have an annual meeting. Some people find that onerous. I find it nice. You can pick anywhere you want to have within reason, to have the annual meeting, and why not pick Maui? Let the corporation pay for the director's expenses to go have an annual meeting. A proper corporation has the following records and be current. That's the underlying thing here, current with them. Articles of incorporation, bylaws, minutes of your director's meeting, stock issuance records, and minutes of meeting and written consents. The articles of incorporation are provided by the state you've set your corporation up in. The bylaws, these are things that you make yourself that says what are the rules of the corporation. They're not filed with the state. They're internal documents. Minutes are internal documents. Stock issuance records are internal documents, but they're very important because if you're ever sued or you're ever audited, the first thing either of those people are going to want to see is your corporate records. And if they're not up to date or you haven't done them correctly, they can use the corporate veil and pierce it, which means you don't have a corporation, which means if that was the sole reason you were able to take a bunch of business expenses, you may not be able to qualify to take those business expenses even in past years. So be very careful and make sure that you keep your business records, whether they're in an LLC or a corporation, up to date. Now, I've got another poll here I'd like to ask you, if I can make it work. Okay, there is the question. The poll is open. Do you use an entity in your business? Fifteen more seconds. Okay. 71% said they don't, 29% said that they did. That's as I would expect it. Now if I can figure out how to get rid of this and get my screen back up there. There we go, I hope. Okay, the reasons you'd use a sole proprietorship. traders or small businesses. Ease and cost of setup. All you do is send for an EIN from the IRS, and there's no formalities on it at all. Excuse me a minute, my IT guy is back with something on his mind. My screen is not showing. Yeah, he's going to go look. Tell me, guys, in the chat thing, if you've got a chat thing. I don't see that I've got it. Yeah, there it is. Can you see my screen now? Okay. Here we go. We're twice shy since yesterday. We want to make sure you get everything. So the reason you use a sole proprietor, the ease and cost to set up, and no formalities. Again, my problem with sole proprietors, the biggest problem that I have is the fact that they're audited quite a bit more often than entities are. Reasons to use a flow-through entity. Asset protection, number one. Remember, asset protection as your assets start to grow is very important. In our litigious society, you can be sued for anything or nothing. And if you're adjudicated against, they can take your personal belongings. So be very careful. Now, the flow-through entities, there's less stringent rules on keeping records except for the sub-S corporation. It formalizes your business, and it cuts way down on the IRS audit. Now, let's talk about a trader. Why would a trader use a flow-through entity? If a trader is trading for profit and needs to take money out of their trading business to live on, absolutely a great way to do it because you pay no payroll tax on it. So that's the type of trader that would use a flow-through entity. Reasons to use a C corporation. Really limited liability. It formalizes your business. Has a smaller tax rates on profits. I mean, extremely small compared to what you and I pay. One of the big reasons is a C corporation and only a C corporation. Now I'm going to say that one more time because I'm going to get 5 questions on this. A C corporation and only a C corporation can have what is called a medical reimbursement plan. And what a medical reimbursement plan authorizes the corporation to do is to reimburse its directors or its employees or whoever it selects for any out-of-pocket medical expenses that they've had. That would include insurance, including Social Security, or whatever it is, the insurance for us older folk. That would include medical payments paid to doctors. That would include prescriptions. How it works is that the individual pays them, and then at the end of the month, uses Excel to create an expense report, gives it to the corporation writes a check back to the individual, and it's deductible as an expense to the corporation. So one of the reasons, if your out-of-pocket expenses for a corporation, or for yourself and your family, exceed $4,000 a year, you know how hard it is to be able to take that deduction as an individual because of the threshold you have to jump over. Why not use a corporation? Now, as a trader, who else might use a C corporation? I like newbie traders to use them because generally they're holding down a job and they're learning to trade. They don't need to take money out to live on. So why not do it in a C corporation where you're going to pay a lot less in taxes? That's the tax efficiency. Later on, if they decide to become a full-time trader, they can form an LLC, which will be owned by the corporation or partially owned by the corporation, and then they'll be able to take money out of the LLC. So there's primary tax efficiencies and there's secondary tax strategies. And as your assets grow, you need to be working with someone that is going to explain all of that to you and make recommendations on your behalf. And the last reason that I would use a C corporation is the Section 1244. Now, I had one question that a fellow called me just before we went on and asked, hey, I get Social Security payments and I'm not sure, your Social Security payments don't get cut off if you make money. You have to pay tax on them, and maybe that's what he's trying to get around. They would use a C corporation to trade with or to do whatever else with, because it's a separate taxpayer, folks. It's a separate taxpayer. Okay, I already have an entity set up. Now what? Well, now that you understand entities, which is the most efficient entity for your business? Is that what you set up? Or did you do what so many people do, and you heard about an entity and you went to one of these corporate puppy mills and set it up? You can always change it, particularly if you set up an LLC. You need to work with somebody to know how to change it. Now, are you sure if you have an entity set up that your paperwork is up to date and correct? That's important in case you're ever audited or sued. Have you had and documented your annual meetings? Have you filed your tax returns for each year? Now, here's something that a lot of people don't know. In a partnership, and that would be an LLC partnership too, you have to file a tax return every year, even if you don't use it. If you don't, the IRS can sue you for every month that goes by that you haven't turned in a tax return for that entity, and sometimes they are 3 years down the road before they realize that you haven't turned in a tax return for that entity. So be careful. If you're not going to use your entity, go to your accountant and tell them you want to dissolve your entity. There is formalities involved in that. I'll tell you, one of the most able guys that I know is John Polk, our tax attorney here at Small Business Financials and Traders Accounting. He knows that stuff on like the back of his head. Now, this is important. That's why I put the purple around it. That's my Washington Husky purple. We offer a free consultation to understand which entity is best for you. If you're confused about which one is best for you, take advantage of this. It's absolutely free. If you've already formed your entity and you don't know whether you've got the right one or you don't know whether your records are up to date, call Raven at 855-334-7936 and set up your appointment. Very important for you to do, folks. Don't procrastinate on it. I don't want to see you get in trouble. Today's takeaways. We talked about flow-through entities, standalone entities, and sole proprietors. And how do they work? We talked about who would use what. Oh, we didn't talk about what state should it be set up in. It should be set up in the state you live in under general circumstances. A lot of people say, oh, no, you got to set it up in Nevada or some other state. That's not true. Nevada is probably one of the most expensive states you set it up in. They use the buzzword, well, Nevada's never signed a tax treaty with the IRS. Big deal. You trying to become a tax protester? The IRS is going to find out anyway. So set it up in your home state. That's always the best way to do. If you live in California, you've got to put some thought into it because of that $800 tax. And the last thing we talked about is I've already set up my entity. Now what do I do? Okay, I think we've got a question box today. I've got one on my computer. Why don't we go there and see if we can answer any questions. Ria's asked which entity is better for writing off trading expenses. Well, it just depends. I hope I answered your question, Ria. You can write them off in any of those entities, but which one is going to be the most tax efficient for you? Everybody see the question box? Please ask any questions. Remember, you can always email me too. And for those of you that were on yesterday's webinar, I got a lot of questions after it. I appreciate those. Boomy says, if Jim, whoops. If an entity is set up, does that not require a new brokerage account? Yes, you need to move your brokerage account into the EIN number rather than your personal Social Security, and thereby being subject to the professional data fees. Generally speaking, you're absolutely right. They are substantially higher. However, a lot of our clients will go to the manager of the brokerage and tell them the only reason they set up their entity was for asset protection, that they're not a professional trader, and they've got by that way. Jim, great seminar. Thank you for the wonderful information. My question is, do single-member LLCs qualify for expense deduction? Yes, as long as they qualify with the IRS as a business. Absolutely. Curtis says, I live in California. I'm sorry. What's the best state to use for a C corporation? I'm not going to answer you, Curtis. California is the best state, obviously. Give me a call. How is trading in an IRA affected by entity choice? If you're trading an IRA and only an IRA, you can't deduct your expenses anyway, so you don't need another entity. An IRA is not very well protected from asset protection. A 401k is better, but you can just continue to trade in your IRA. What if you trade and own a small business? What is the best way to set it? Is Wisconsin a good state? Steve, yeah. If you own a small business, now it becomes a little touchy here. If the small business is in any way litigious, or you could get sued, you want to use two different entities, one for the small business and one for your trading, because if your small business is sued, you don't want them to be able to take your trading account away from you. If it's not litigious, there's no way in hell that anybody would ever think about suing it. You could use the same way. Wisconsin a good state to set up an entity? Eric, it is, yes. I will be a Nevada resident and live a good portion of time in Nevada. I assume that if that's the case, you might want to set it up in Nevada. Mr. Gupta says, can I contribute to a Roth IRA, and in which entity? In any of them. And that's a good question and a good thing to do. Okay, Richard, thank you. Folks, we appreciate your being here. Our next I think it's on the next slide. Let me get over there. Nope. We will have our next webinar for small business for SBF again next Thursday morning at 7:30, and I believe we're talking about let me think for a moment. Oh yeah, extremely important thing. Independent contractors versus employees. Which is the best one for you to have, and how do you make that decision? Again, folks, I appreciate you. Have a great day. Bye-bye.